Current market price for BigBear.ai Holdings ticker BBAI is trading live at $6.84. We are seeing a fairly volatile intraday session with the stock swinging between a low of $6.54 and a high of $7.04. The market is actively trading right now, and what catches the eye immediately is the volume. Over 113 million shares have changed hands, which is already significantly higher than its average daily volume of roughly 93 million. The stock is currently pushing a slight gain of roughly 0.15% to 0.5% depending on the second-by-second fluctuation, but the real story isn't the percentage point move. It is the massive consolidation of capital happening just beneath the surface. You might be looking at this chart thinking this is just another small-cap AI stock struggling to find its footing after a mixed earnings report. That is the expectation. The narrative out there is that BigBear.ai is burning cash, its revenue is lumpy because of government contracts, and it is a risky speculative play that retail traders hype up on forums. Here is the reality that almost everyone is missing. BigBear.ai is quietly transforming from a software vendor into a formidable defense prime contractor, armed with a war chest of over $715 million in cash and investments, a figure that nearly rivals the market cap of some of its competitors. While the retail crowd is arguing about quarter-over-quarter revenue dips, institutional giants like Vanguard and BlackRock have been aggressively loading the boat, increasing their positions by millions of shares. This isn't a gamble on a meme stock for them. This is a calculated bet on the future of autonomous warfare and decision dominance. The price action you see today, chopping around the $6.80 level, is likely the result of this massive institutional accumulation absorbing the liquidity from impatient retail sellers. When you look at a stock like BigBear.ai, you have to strip away the noise of the daily fluctuations and look at the plumbing of the trade. Today's action, bouncing off that $6.54 support level, tells us that there is a firm bid underneath the price. The market is testing the resolve of holders. We saw a sharp dip earlier in the session, likely triggering stop losses for those who bought in the $7 range last week, but notice how quickly that dip was bought up. That is a hallmark of smart money accumulating. They don't chase prices up, they set limit orders down low and wait for the panic selling to hit them. The volume today confirms this transfer of ownership. When you see 113 million shares trade with the price remaining relatively stable, it often indicates a changing of the guard from weak hands to strong hands. Let's address the elephant in the room regarding the recent sentiment. The expectation was that BigBear.ai would continue to bleed out as government contracts face delays. And yes, if you look strictly at the top-line revenue for the third quarter of 2025, it dropped 20% year-over-year to $33.1 million. On the surface, that looks bad. It looks like a growth company that stopped growing. But this is where the expectation versus reality framework is critical. The reality is that the company beat earnings per share expectations significantly, posting a narrower loss than anticipated, and more importantly, they are sitting on that massive cash pile I mentioned earlier. In the world of government contracting, cash is not just safety, it is leverage. It allows them to acquire smaller, faster competitors, which is exactly what they did with the acquisition of Ask Sage. Before we go deeper into Ask Sage and the fundamentals, I want you to engage with this for a second. Comment below how many shares of BigBear.ai you currently hold and at what price point you got in. Are you holding for the long-term defense play, or are you trading the volatility? I'm curious to see where the community stands on this. Now, let's talk about the broader sector momentum, because BigBear.ai does not exist in a vacuum. We are seeing a rotation back into defense technology. You look at Tesla stock and how it rallied on autonomous promises, or NVIDIA stock powering the data centers, and you realize that AI is moving from generative chat to kinetic action. That means AI that does things in the real world. For the military, this is the holy grail. BigBear.ai sits right at this intersection. They aren't trying to build a chatbot to write high school essays. They are building decision dominance systems for the U.S. Army. Their core product involves complex AI orchestration. They have a history of working with the U.S. Army on the Global Force Information Management System. This is the back-end brain of the Army. It ensures that the right people with the right equipment are at the right place at the right time. It sounds boring compared to a missile, but wars are won on logistics, and BigBear.ai is digitizing that logistics brain. But the real spice, the development that should have you paying attention, is the recent acquisition of Ask Sage. This is where the reality completely eclipses the expectation. Ask Sage is a generative AI platform specifically built for the government. Why does that matter? Because you can't just run ChatGPT on a Pentagon server. It's a security risk. Ask Sage is designed to be secure, compliant, and ready for classified environments. It supports over 100,000 users across 16,000 government teams. By acquiring them, BigBear.ai didn't just buy technology, they bought adoption. They bought a user base that is already addicted to the product. This moves BigBear.ai from a company trying to sell big, clunky contracts to a company that has a viral software product spreading through the lower levels of the Defense Department. This is a classic land and expand strategy. You get the analysts using Ask Sage for their daily reports, and suddenly the entire department needs a BigBear.ai enterprise license. It's the same strategy Slack or Zoom used in the corporate world, but applied to the Department of Defense. Furthermore, we need to discuss their Vision AI capabilities, largely bolstered by their earlier acquisition of Penguin. This technology is used at airports for facial recognition and threat detection. It creates a digital border. With geopolitical tensions rising and border security becoming a hot-button issue globally, the demand for frictionless biometric security is skyrocketing. BigBear.ai is positioned to be the vendor of choice for this. It's not just about military, it's about homeland security. Now, let's look at the financials again with a critical eye. The naysayers will point to the negative EBITDA. And yes, in a high-interest rate environment, losing money is dangerous. That is why the cash position is so vital. They ended the recent quarter with over $715 million in cash and investments. This was partly due to exercising warrants and raising capital, which does dilute shareholders, a valid concern. But ask yourself, why raise that much cash now? Management is preparing for something. In the defense sector, size matters. You need a strong balance sheet to bid on the massive billion-dollar prime contracts. By bolstering their cash reserves, BigBear.ai is signaling to the Pentagon, "We are stable. We aren't going bankrupt. You can trust us with a 5-year contract." This financial stability is likely what attracted the institutional investors. When you look at the 13F filings, seeing Vanguard increase their stake by over 30% and BlackRock by nearly 18% is a massive vote of confidence. These firms have teams of analysts who do nothing but crunch numbers. They wouldn't be parking that much capital in a company they thought was about to implode. They see the disconnect between the current stock price and the long-term intrinsic value of the contracts BigBear.ai is bidding on. If you are using Schwab Intelligent Portfolios or looking at investing sites to manage your own money, you know that spotting institutional footprints is one of the best ways to find value. Retail traders often panic at the first sign of a red candle, but institutions use those red candles to buy at a discount. The smart friend advice here is to watch what the whales are doing, not what the message boards are saying. Let's discuss the risks, because a professional analysis must be balanced. The biggest risk for BigBear.ai is the timing of government contracts. The lumpiness of their revenue is real. The government operates on its own schedule, and delays in the federal budget or shifts in administration priorities can push revenue out by quarters or even years. We saw this with the recent revenue miss. Certain Army programs slowed down. If you are an investor here, you have to have the stomach for that volatility. You can't freak out because one quarter was light. You have to look at the backlog and the pipeline. Another risk is competition. They are going up against giants like Palantir, Booz Allen Hamilton, and even traditional defense contractors who are building their own in-house AI. Palantir is the 800-pound gorilla in this space. However, the market is big enough for multiple winners. The DoD wants vendor diversity. They don't want to be reliant on just one software provider. BigBear.ai offers a compelling alternative.